Ever felt the anxiety of an unexpected expense draining your bank account? The stress of financial instability can keep you up at night, but there's a solution: building an emergency fund. Welcome to Fire Movement Lab, your trusted guide to achieving financial freedom and security. Today, we're diving deep into the steps you need to take to build a robust emergency fund. This isn't just about setting money aside, it's about creating a financial safety net that protects you from life's unexpected twists and turns. Imagine the peace of mind knowing you can handle any financial surprise, from car repairs to medical bills, without breaking a sweat. Sounds incredible, right? Stay with us, and by the end of this video, you'll know exactly how to build and maintain an emergency fund that secures your financial future. Ready to take control of your financial destiny? Hit that subscribe button, give us a thumbs up, and let's get started on this essential journey to financial security. Why you need an emergency fund. First, let's discuss why having an emergency fund is crucial. Life is unpredictable, and unexpected expenses can arise at any moment. Whether it's a sudden job loss, a medical emergency, or major car repairs, having a financial cushion can help you navigate these challenges without going into debt. An emergency fund serves as a buffer, protecting you from the need to rely on credit cards or loans, which can lead to high interest rates and long-term debt. It provides peace of mind, knowing you have the financial means to cover unexpected expenses, allowing you to focus on other financial goals, such as saving for retirement or investing. Moreover, an emergency fund can prevent financial stress from impacting other areas of your life. Financial security contributes to overall well-being, reducing stress and anxiety, and allowing you to make better financial decisions without the pressure of immediate financial crises. How much should you save? The next step is determining how much you should save in your emergency fund. Common recommendation is to save 3 to 6 months worth of living expenses. This amount should cover your basic needs, such as housing, utilities, food, transportation, and healthcare in case of a financial emergency. To calculate your emergency fund target, start by listing your monthly expenses. Include rent or mortgage payments, utilities, groceries, transportation costs, insurance premiums, and any other essential expenses. Multiply this total by 3 to 6, depending on your comfort level and job stability. For instance, if your monthly expenses are $2,000, aim to save between $6,000 and $12,000. If you have a more volatile income or dependents, you might want to save closer to 6 months worth of expenses. Conversely, if you have a stable job and fewer financial obligations, 3 months might be sufficient. The key is to find a balance that provides adequate protection while remaining achievable. Setting realistic savings goals. Building an emergency fund can seem daunting, especially if you're starting from scratch. The key is to set realistic savings goals and break them down into manageable steps. Start by setting a short-term goal, such as saving $500 or $1,000. This initial amount can cover minor emergencies and provide a foundation for your larger fund. Once you reach this milestone, gradually increase your goal until you reach your desired emergency fund target. Automating your savings can make the process easier. Set up automatic transfers from your checking account to your savings account each month. Treat this transfer like a bill payment, ensuring it's a priority in your budget. Even small, consistent contributions can add up over time. Additionally, consider ways to boost your savings. Look for areas in your budget where you can cut back, such as dining out, subscriptions, or entertainment. Redirect these funds into your emergency savings. You can also allocate windfalls, such as tax refunds, bonuses, or gifts, to your emergency fund to accelerate your progress. Where to keep your emergency fund? Choosing the right place to keep your emergency fund is essential. You want your funds to be easily accessible in case of an emergency, but also earn some interest to keep up with inflation. A high-yield savings account is an excellent option. These accounts offer higher interest rates than traditional savings accounts, allowing your money to grow while remaining liquid. Look for accounts with no monthly fees and easy access, such as online banks or credit unions. Money market accounts are another option, offering competitive interest rates and check writing capabilities. However, they may require higher minimum balances and have limited transaction allowances. Avoid tying up your emergency fund in investments like stocks, bonds, or mutual funds. These assets can be volatile and may not be easily accessible in a financial emergency. The goal is to have your funds readily available when you need them. Once you've chosen an account, label it specifically for emergencies. This helps psychologically by discouraging you from dipping into the fund for non-emergency expenses. Building your emergency fund. Practical step. Now that we've covered the basics, let's dive into practical steps to build your emergency fund. Create a budget. Start by creating a detailed budget that outlines your income and expenses. This helps identify how much you can can realistically save each month. Categorize your expenses into essentials, groceries, utilities, and non-entertainment dining out. Track your spending. Use budgeting apps like Mint, YNAB, You Need a Budget, or Personal Capital to track your spending. These tools can help you identify areas where you can cut back and redirect those funds into your emergency savings. Automate your savings. Set up automatic transfers from your checking account to your emergency fund. This ensures consistent contributions and removes the temptation to spend the money elsewhere. Cut unnecessary expenses. Review your budget and identify non-essential expenses that you can reduce or eliminate. This could include dining out, subscription services, or impulse purchases. Redirect these savings into your emergency fund. Increase your income. Consider side hustles or freelance work to boost your income. Platforms like Upwork, Fiverr, or TaskRabbit offer opportunities to earn extra money that can be allocated to your emergency savings. Use windfalls wisely. Allocate windfalls, such as tax refunds, bonuses, or gifts, to your emergency fund. This can significantly accelerate your savings progress. Set milestones and celebrate progress. Break down your ultimate savings goal into smaller milestones. Celebrate each milestone to stay motivated and maintain momentum. Remember, building an emergency fund takes time and discipline. Stay committed to your savings plan, and you'll gradually build a financial cushion that provides security and peace of mind. Maintaining your emergency fund. Once you've built your emergency fund, it's crucial to maintain it. Regularly review your budget and savings contributions to ensure you're staying on track. Replenish your emergency fund promptly if you need to use it. If you dip into your fund for an unexpected expense, adjust your budget to replace the withdrawn amount as quickly as possible. Consider adjusting your savings target over time as your financial situation changes, such as increased income, additional dependents, or higher living expenses. Reevaluate your emergency fund goal to ensure it still provides adequate protection. Avoid the temptation to use your emergency fund for non-emergency expenses. To help with this, establish a separate savings account for discretionary spending or specific financial goals, such as vacations or major purchases. Using your emergency fund wisely. Knowing when and how to use your emergency fund is just as important as building it. Your emergency fund should be reserved for true emergencies, unforeseen expenses that are necessary and urgent. Examples of legitimate uses include unexpected medical bills not covered by insurance, major car repairs needed to keep your vehicle operational, immediate home repairs such as fixing a leaking roof or broken furnace, sudden job loss or reduction in income. Before tapping into your emergency fund, evaluate whether the expense truly qualifies as an emergency. Consider other options for covering the cost, such as adjusting your budget or using discretionary savings. When you do need to use your emergency fund, keep track of the expenses and the amount withdrawn. This helps you plan how to replenish the fund and maintain your financial security. Benefits of having an emergency fund. Having an emergency fund offers numerous benefits beyond financial security. It reduces stress and anxiety, knowing you're prepared for unexpected expenses. This peace of mind allows you to focus on other financial goals, such as saving for retirement, investing, or paying down debt. An emergency fund also provides flexibility and control over your financial decisions. Without the pressure of immediate financial crises, you can make more thoughtful and strategic choices about your money. Furthermore, an emergency fund can improve your overall financial health. It prevents you from accumulating high-interest debt and helps you build a habit of saving. Over time, this habit can extend to other areas of your financial life, promoting long-term financial stability and success. Conclusion, and there you have it, a comprehensive guide to building an emergency fund for financial security. By understanding the importance of an emergency fund, setting realistic savings goals, choosing the right account, and maintaining your fund, you can create a financial cushion that protects you from life's unexpected challenges. Building an emergency fund isn't just about setting money aside, it's about establishing peace of mind and financial stability. Remember, the journey to financial security is a marathon, not a sprint. Stay committed to your goals, and over time, you'll build a robust safety net that allows you to handle life's uncertainties with confidence. Thanks for tuning in. If you found these insights valuable, hit that subscribe button, give us a thumbs up, and share your thoughts or questions in the comments below. We love hearing from you and are here to support your journey to financial security and independence. This is Fire Movement Lab, where we explore innovative ways to achieve financial independence. Keep learning, keep saving, and we'll see you in the next video.